CoreWeave just did something big that most people are kind of sleeping on. They didn't announce a new GPU cluster or another monster AI startup deal. They quietly launched CoreWeave Federal, and NASA's Jet Propulsion Lab is already using it. So the real question now is this how CoreWeave turns from a neo-cloud hype stock into a long-term AI infrastructure backbone? Or is this just another bullish headline on a very expensive, very volatile stock? Let's break it down with real numbers, real risks, and what this federal move actually means for CoreWeave's future. Hey everyone, welcome back to the channel. Today we're diving into CoreWeave and specifically this new angle you might have seen in a recent Yahoo Finance/Zacks article. Will the federal market entry enhance CoreWeave's competitive lead? We'll cover CoreWeave's latest earnings snapshot, growth, backlog, and volatility. What CoreWeave Federal actually is and why NASA JPL matters. The capacity plus software stack that might be the real moat. How it stacks up against Microsoft and Nebius in this AI infrastructure arms race. Valuation, risks, and the kind of investor who might want to stay far away. As always, this is not financial advice. I'm just sharing my research so you can make your own decisions. Let's start with the scoreboard. In Q3 2025, CoreWeave reported revenue about $1.36 billion, up about 134% year over year. A revenue backlog of $55.6 billion, almost triple from a year ago. That backlog is built on massive, multi-year AI infrastructure deals, up to $22.4 billion in total commitments from OpenAI, around $14.2 billion from Meta, plus multiple contracts with a leading hyperscaler and a growing list of enterprises. On the infrastructure side, CoreWeave now runs about 590 megawatts of active power. Total contracted power is around 2.9 gigawatts, with over 1 gigawatt still available to sell to future customers. So at a high level, the Yahoo article is right. This is not a tiny AI startup. CoreWeave is already a multi-billion-dollar revenue machine with a huge backlog and serious power behind it. But the part that gets less attention is this. The company still reports GAAP net losses, thanks to huge interest expense, depreciation, and stock-based comp. Management also cut 2025 revenue guidance to about $5.05 to $5.15 billion after a data center build-out delay, which is one reason the stock sold off recently. And as of now, CoreWeave stock trades around $88 per share, with very high volatility and big swings in both directions. So the setup is insane growth and a massive backlog, but also execution risk, heavy capex, debt, and guidance getting nudged down when build-outs slip. That's the backdrop for this federal push. The Yahoo piece focuses on CoreWeave Federal, and this is where things get interesting. CoreWeave has launched a dedicated public sector offering called CoreWeave Federal, aimed at U.S. government agencies, defense, and the wider industrial base. The goal is to be an AI-native cloud that ticks the boxes governments care about. High-performance GPU infrastructure for AI workloads. Strong security and compliance aligned with evolving U.S. cybersecurity standards. The ability to adopt AI safely and at scale. The headline logo that everyone points to, NASA's Jet Propulsion Lab, is already using CoreWeave's platform to support scientific exploration and advanced AI workloads. Why does that matter? Because NASA JPL isn't just some random logo. It's a high-signal reference customer. It tells other agencies, yes, this infrastructure can handle complex, mission-critical workloads and meet strict security expectations. The Yahoo article basically argues, entering the public sector expands CoreWeave's addressable market at a moment when governments are going AI-first in defense, science, and infrastructure. And that part is absolutely true. Across the US and Europe, you now have defense departments, research labs, and infrastructure agencies actively building AI projects, not just talking about them. Sovereign and public sector AI infrastructure is a real growth vector. So CoreWeave Federal is less about instant revenue and more about getting early logos like NASA, building trust in sensitive workloads, and positioning CoreWeave as a long-term, high-moat partner for AI and government. The article also hints that it's not just about more GPUs, it's about infrastructure plus software. Let's unpack that. Infrastructure scale, about 590 megawatts active power today, 2.9 gigawatts contracted, over 1 gigawatt unsold that can be monetized as demand comes in. That's important for Federal because many public sector deals are long-term. They lock in capacity and pricing for years, and agencies want confidence that their provider can keep scaling capacity as AI workloads grow. Software stack. On top of the hardware, CoreWeave has been building and buying a pretty serious AI-native software layer. Mission Control, CoreWeave's orchestration platform, designed to keep GPU clusters highly utilized and cut job failures. Focused on high good put, so that AI models actually train efficiently instead of GPUs sitting idle. AI Object Storage, launched in late 2025, object storage designed specifically for AI data. Global dataset access, no egress or request fees, and very high throughput so models can stream training data fast. Zero-egress migration tools allow customers to move large AI datasets from other clouds into CoreWeave without paying massive egress bills, which is one of the biggest frictions for switching vendors. Acquisitions and partnerships. Deals around AI tooling and data platforms are aimed at building a vertically integrated AI stack, from data to training to inference. Put this together, and you can frame it like this for viewers. CoreWeave isn't trying to be just a cheaper AWS. It's trying to be a purpose-built AI cloud with very high-density NVIDIA infrastructure, AI-tuned storage and networking, and software that squeezes more useful work out of the same GPU. That's exactly the kind of thing federal and enterprise customers care about when they're running huge, expensive AI workloads. Now, the Yahoo article also spends time on competitors' moats, mainly Microsoft and Nebius. Let's start with Microsoft. Microsoft has an absolutely massive head start in the US public sector. Azure for US government and Azure Government Secret Serve civilian, intelligence, and defense workloads. Azure Government has key certifications like FedRAMP High and DoD Impact Levels IL5 and IL6, meaning it can run even classified missions. Microsoft is also one of the core players in the Pentagon's JWCC program. So let's be real. CoreWeave is not going to walk in and replace Azure as the default federal cloud. The more realistic scenario is Azure remains the primary, general-purpose government cloud, while providers like CoreWeave become specialist AI clouds that agencies plug in when they need more GPU-dense, AI-tuned capacity. Now, Nebius, another neocloud player the article mentions. Recent data for Nebius, Q3 2025 revenue, $146.1 million, up 355% year over year. Signed a $3 billion, 5-year AI infrastructure deal with Meta, on top of an earlier $17.4 billion contract with Microsoft. Market value has roughly quadrupled this year to around $27 to $28 billion, and they're targeting $7 to $9 billion annualized revenue by late 2026. Nebius is pushing its own enterprise AI platform with a big focus on security, control, and compliance for large organizations. So how does CoreWeave stack up? CoreWeave, larger revenue today, much bigger backlog, deeper US presence, and now CoreWeave Federal with NASA JPL and other sovereign-type customers. Nebius, smaller, but growing even faster in percentage terms. Big deals with Meta and Microsoft, more European footprint, and heavy enterprise push. For your viewers, you can frame it as Microsoft is the entrenched government incumbent. CoreWeave and Nebius are the high-growth specialists. They're not replacing Azure. They're trying to become the AI turbo cloud that runs next to it. The Yahoo/Zacks piece also hits on valuation. They highlight that CoreWeave trades at around 10.8 times price to book versus about 5.8 times for the broader internet software industry. Almost double the sector's P/B multiple. In plain English, you are paying a big premium for CoreWeave's growth and backlog. At the same time, the stock has dropped roughly 20% plus over the last month, partly because of the 2025 guidance cut after a delay in one data center project. Zacks also notes that earnings estimates have actually moved up for future years. Losses are expected to shrink faster than previously thought as scale kicks in. So the story investors are being told is short-term. Expect lumpy, volatile quarters, big swings if build-outs are delayed or if demand timing shifts. Medium-term, if CoreWeave executes, that $55 billion plus backlog and growing federal plus enterprise demand could push it closer to sustained profitability and justify the premium. But there are real risks. Execution risk: you have to keep building data centers, power, and networking fast enough to convert backlog into revenue. Any delay gets punished quickly, as we just saw. Leverage and capex: billions in capex and large financing facilities mean investors are effectively funding a massive AI real asset build-out. Competition: Microsoft, Google, AWS, Nebius, and others are all racing to secure the same AI workloads. Federal and sovereign deals often get spread across multiple providers. AI cycle risk: if AI spending slows more than expected or becomes more efficient, the sector could re-rate lower. Let's answer the question from the Yahoo article directly. Does entering the federal market enhance CoreWeave's competitive lead? I'd break it down like this. Yes, strategically. Landing NASA JPL and launching CoreWeave Federal gives CoreWeave higher quality, longer duration customers, a foothold in sovereign and sensitive workloads, and a chance to build a sticky moat around AI infrastructure for science, defense, and national projects. But it does not remove the core risks. The company is still high growth, high capex, and high volatility. It still competes against giants like Microsoft and fast-growing rivals like Nebius. And the stock still trades at a premium valuation that assumes a lot of things go right. So how should investors think about it? If you're looking at CoreWeave as a potential investment, the question isn't, is Federal bullish? Of course it is. The real questions are you comfortable owning a company that's still loss-making on GAAP, spending heavily on data centers and power, and exposed to construction, financing, and AI cycle risk, in exchange for hypergrowth, a $55 billion plus backlog, deep NVIDIA alignment, and now an early foothold in US federal AI workloads? If the answer is yes, this might look like a high beta way to bet on AI infrastructure and sovereign AI demand. If the answer is no, it might be smarter to stick with more diversified names like NVIDIA or Microsoft and let them capture the upside further up the value chain. Let me know in the comments. Does CoreWeave Federal make you more bullish on CRWV? Or do you still see this as a risky neocloud trade that could get hit hard if the AI cycle cools? If you found this breakdown helpful, hit like, subscribe, and share this with someone who's trying to understand what's really going on with CoreWeave. Thanks for watching, and I'll see you in the next one.